you so much for joining us tonight.
No
Do you mind
problem.
introducing yourself for our audience,
Yeah,
in
sure.
the UK and abroad, and what you do?
Yeah, absolutely. So my name's Tim Rooney. I'm the CEO of Salad Money. We're a fintech lender. We started trading in May of this year. The company was actually started in 2018. We use open banking to decision small loans for NHS employees in the UK. So that's the business that we do.
How many people are we talking about?
So the NHS is the largest employer in the UK. It's the fifth largest employer in the world. So they have a staffing number of about 1.5 million. By dint of them being the largest employer in the UK, they're also the largest users of payday loans, or have been the largest user of payday loans in the UK.
So if you were to quantify the need, how big is it?
The size of the market? Well, interestingly, I suspect that something like 10% of the NHS employees are accessing payday loan high-cost credit in the UK. So I would put the market probably at around about 150,000 users from the NHS alone are accessing payday loans.
Wow, it's
huge.
It's huge, and it's kind of a little bit sobering to hear it, because you just realise that these people are working for such a big, huge organisation like the NHS. So, and actually seeing that there are people in need even in that organisation, and it's incredible what you do. So we're talking about open banking being that force for good.
Yes.
And how has it been driving financial inclusion so far?
So for us, the reason why NHS employees are probably turning to high-cost credit is because they probably have one of two things. They either have a credit impaired score, or they are over-indebted. And that's something that we've seen in our pilot that we started in May with Merseycare, an NHS trust in Liverpool. So we very quickly started to realise that in-work poverty wasn't really the issue. There were individuals who were accessing high-cost credit products, or indeed some mainstream credit products that they had been lent to, in my opinion, inappropriately. So for us, the ability to identify that utilising open banking was a very important part of our process. It forms the sole reason as to why we'll lend to an individual. We make a commitment that we will never lend to someone who can't afford to pay us back. And at best, our loans cost £50 a month at the highest level. And we make a commitment that we will never lend to anyone who can't afford to repay a loan out of their disposable income. So our current supplier identifies all of the breakdowns within open banking that says this is the disposable, non-disposable, and from that we're able to make an assessment using some other proprietary methods of understanding and scoring those individuals, and then we'll make a lending decision. We're accepting about 80% of the population that apply to us. If you were using a credit scoring method, you'd probably accept between 20 and 30% of the people that applied to you. So we're able to deliver affordable credit to a larger audience than if you were using a credit scoring method.
#ethical lending. From your experience, how has it been progressing?
So our consumers make a conscious decision to share their information with us. We get 2 years worth of current account information from each consumer, which then forms part of our process. I would urge consumers to embrace this technology and for them to look to share their own data with other providers if that so happens. I'm deeply concerned that open banking data falling into the hands of credit reference agencies, for instance, would only impair the process for consumers going forward. So for me, I'm slightly concerned that the credit bureaus are marching into open banking territory and combining credit scores with open banking. I think the two things shouldn't sit together. I think they're completely separate. The reason why they're doing it, because I believe they genuinely understand that the power of open banking lies with the consumer, not with the bureau that hosts the consumer's data. It's a hobby horse of mine, and I'm going to keep banging the drum, but I'm deeply concerned that we've seen recent acquisitions within this marketplace of open banking providers by some of the credit bureaus. I just think there is a stored up problem that's going to happen with that.
Okay, so we see one big challenge rising. What are the challenges have you seen?
The challenge, I suspect, is that more people need to open up their banking to become totally digital, and therefore to be able to utilise the open banking capabilities that suppliers like myself offer. What I would say is that there wasn't any trepidation from our borrowers in accessing what ostensibly is quite a clunky journey at this stage. We still experience the changes, the subtle changes that banks do to the way that we can access the open banking data without really informing anyone. And we often see that the Scottish bank, for instance, might not be working, or the big blue bank might not be working. So I think there needs to be a lot more communication. I actually think there needs to be a sort of monitoring service, and I can see someone entrepreneurial creating that uptime monitoring service. I think it's really important that events like this exist. I think there are no secrets in the commercial world, and ideas are cheap. It's execution that really is the core and the thing that people need to be focusing on. There's a lot of shared learning in the room that goes on. I know Helen is a fantastic promoter of this. I've actually appeared before when I was with Big Issue talking about Big View, and I think it's really impactful that we can tell the good things about how open banking can change people's lives, and I genuinely believe it has that ability to carry that out for individuals.
Wonderful team. Thank you so much for joining us tonight. Thank you. Bye-bye.